Good evening. We got a stock market update like we predicted the last few times. No surprise here. Uh, there shouldn't be surprises really with the stock market. You just look at the charts, and if you get something different, then it's either fraud or some other similar sinister factor. So, got a few points here tonight. I'll be very clear. This is maybe more on a personal note, but people can take what they want from that. Um, there's some talk there with the Fed that they're possibly raising rates to deal with the job claims, and it's possible, but it's not smart on the Fed's move. You're not going to get people to work or return to work or work more with a declining stock market. Most people who are in that situation probably don't even check the stock market first off. So yeah, and probably if they do check it, it's probably not going to put them in a good mood. So you can't force people into work. It's not North Korea. The way to do that, we've talked about that before, and we could keep talking about it as long as I need to. Is incentives, which is most primarily for a worker, would be their salary. So you just raise salaries to deal with that situation. I myself have left my previous job and will not be returning to those jobs. If I do change my work situation or this or that, it's going to be a different situation than in the past. Each situation for me is kind of like a Chinese firewall. So, I don't return to a previous negative situation. If that is looks like it's necessary. I deal with if that's not working, try something new is the situation for me. Um, and there's a kind of another philosophy I think that's been floated out there recently with the hedge funds and those big players, that they are taking a negative position on the market. Um, First of all, most of those people are still working, and I wouldn't call that a fraudulent situation, but sometimes you do get lucky. Um, and that's kind of a complicated situation. If they go head to head with me, they're not going to beat me, because, like we addressed on the first point, and once that value is kind of destroyed, like in a bankruptcy case, it's just not replenished. It's kind of gone permanently. So that's not a situation where it looks like the victorious party should be celebrating. It's known as value destructive, and there's really no winners in that situation. And kind of on a personal note, um, I don't play the games that they do, and like I said, I don't really. I don't even have to get into the games that they're playing to deal with my financial situation. So I'm way ahead of them, and they're not going to catch up on me on that. So the other part is the Fed. Um, um, I don't know what their beliefs are there. I think they have been quite clear, although they're not always clear, and they're not going to change the job situation. If they have another motive there with the interest rates, certainly that's a different story. But the problem with the job situation, I think, is you have to at least factor in the opinion that a company may be at fault here, not the workers. That's called the law of one price, and a company is not. Companies you see getting fined all the time, um, doing shady stuff. So you can't really say that a company is the good guy here and the worker is the bad guy. It's kind of a pull situation there, where the company needs to provide a fair rate of return to the worker. And if you see kind of a worker shortage, and maybe the company's not doing enough. So that's not the workers' responsibility there, that they're lazy or they don't want to work or some other issue. There's a equal probability that the company is not treating their workers correctly. And that's something I don't think the Fed's considering. Um, because you don't want to get in a situation where you're trying to reward the bad guy, because that won't work either. So the Fed needs to consider that situation. And I think um, at the end of the day here, we're kind of dealing with a situation with the stock market. I, um, for me, it's kind of, one part of me wants to say, let's keep letting the market drop, and because it's not going to make any difference to me. Um, for me, it's just excess money, but it'd be kind of funny in a way to let these people who I believe are responsible for the market decline to watch their 401ks shrivel up, or some other situation. So it's kind of like the people that are leading to the stock market decline are the ones that are going to bear that brunt. And if they want to do that, go ahead. That's their prerogative, but it's not going to end poorly. It's not going to end well for them. Um, so you can take a worker who's 70 years old, and they're not able to work anymore, and their 401k is not worth anything. So if you want to go ahead and do that, go ahead. I don't recommend that, but part of me does want to see that. I don't mean that in a negative way, but I think these people are the same group, and they're responsible for that stuff. So you know we'll see what happens, but it's not a situation that you're going to get to me, because um I've done what I should do, so I win either way. So if you want to go ahead and do that, and screw yourself over, take the Thelma and Louise approach at the end, that's up to you. So go ahead and do that if you want, and I'll be sitting there front row.